All right, thank you so much. So very quickly, we move on to outlook for 2023. And I think Mr. Kofi already started that by telling us what he expects 2023 to look like. Let's start from home. Now, you're here with me, so talk to us. Looking at the equities market now, what are your projections and your expectations?
I will start by saying that, yes, even we expect to see a mixed market for the year 2023, but this recovery we have seen so far is going to kind of extend into 2020, especially in the first quarter of 2023, despite the election coming in February. What I say so is that in this market feed, price feed on earnings, because earnings is major driver in the market. No matter if you are trading, time and price is the major thing we want to look at. And that's why we are seeing this rally in the market is because of the timing and the price we are seeing. That's why you see the kind of movement. People are saying that prices are low, relatively low, we are seeing value in the market, and the time for it to get reasonable return is short compared to other investment window. Like Mr. Ladipo just said, we saw that the last MPR, last Treasury bill offering that was done, we saw that the long coverage about 364 days were below 10%, and inflation is almost around 21.47. For that trend will continue. But don't forget that as from that first month of January, we expect to see unaudited account from those that had December as year end. That will be also an eye opener, also a guide to see the strength of this company, to see if dividend will start coming from the month of February and March. And that if start coming, that will support the market. And also don't forget, if the election also comes successfully, the first election is coming on the 25th of February for presidency and all those National Assembly. If that election comes and we're able to have a winner from that first one, that will change the psyche, change the environment. Why I say so? Because once we see a winner, we expect to see a post-market, post-election rally will come. And don't forget, also from April, I also seen the first quarter earnings for those companies that had December as year end, because end of March. For those that had September already, that released their full year, from January, that's seeing their first quarter again. These are the things that will support the market going to the new year. And don't forget that I said that once after the election, whoever that come will start running without taking time. Why? Because you want to start planning so that on 29th, after handing over the government, or not going to wait for another 6 months, as was seen earlier before, because now, yes, because everybody is just knowing that we need to move. For that reform we're expecting that also open the market, attract new entrants, and don't forget that you can't be an isolation from the world. If we get the right president, these foreign people that are still standing at the window or at the fence now watching us, they will clearly come to them because the yield in the market is equally and interesting. And also coming with their dollar, hard money, also to support the market positive. I believe that next year, as Alaji said, and Mr. Chivitin, that we expect to see a good market, but you must understand the trend in the market, because you need that time to bring the market to take profit, so that the market will not just take you up and still bring you down. So that once you know how to take profit, you know when to stay and when to enter. You go with the market. The market is good, both the fixed income and the equity market, because one, for fixed income, once there is another rate hike, because during that substitute removal, we're going to see rate hike to match what inflation will be. That also support fixed income, but for now that it's still declining, we're seeing that investors to stay with the equity market. And now that I'm saying that they can make money in the equity market, once opportunity, we can also move our money to fixed income market. That is why I see the next year. I see a mixed trend, but the recovery will continue to end of first quarter. Okay,
so Oladipo, let's have your thought. I don't know, I'm just like tackling you, but go ahead. I'd like to hear from you.
We're together.
For 2023, it's going to be a good year for fixed income. And I will start from the angle of the budget. When you look at the budget, and you have a deficit north of 10 trillion, knowing fully well that the international market is not that palatable now for Nigeria government to actually raise funds. It simply means that most of those funds will be raised in local markets. And just like what Malam Kupi has said earlier on, when you want to come to market aggressively to borrow, you must be able to pay with the rates. And that's exactly what we're going to see next year. It means that the DMO will need to actually pay with rate to actually be able to actually crowd the local markets. And also aside for the federal government instruments as well, it simply means that the federal government is very much aggressive in the market. So it means that any corporate that is coming to the market needs to pay a premium to actually be able to access people's funds in the year 2023. And what that will mean to investors is another level of better yield and better return to investor in the year 2023. And also we also know that 2023, if you look at the three front runner in the presidential election, they are of the view that subsidy must go, and we know the impact of the subsidy going means that inflation will actually hit the roof, and as a result of that, there might be every tendency that we may actually see more rate hike from the part of the Monetary Policy Committee guys, and as a result of that, what that would mean to the fixed income market is also another level of upside in yield in the market for 2023. So 2023 is going to be a very good year for fixed income investors, and not only in the domestic markets, also in the foreign market. Next year, Fed is actually now currently pressing the brake slowly now on the part of rate hike. In the month of December, they did 50 basis points. And they also gave a forward guidance that we would see more rate hike going into year 2023. So it also means that there are still opportunity in the Eurobond space. If you look at, for example, access perpetual bond, currently the yield is about 19.5%. And when you earn 19.5% on a dollar-denominated instrument, it tells you an idea of the level of attractive investment that is actually in the market as we speak.
All right, thank you so much. Mr. Kofi, I'd like to take you on this one. I mean, the two speakers, the people who spoke earlier, have talked about the fact that subsidy might be removed by the second half of 2023. And there are also speculations or some analysis that if that happens, inflation will hit the roof. Now, talk to us. Are there palliatives?
Well, yes, as they have stated, but removing subsidy is not that as easy as feasible.
Yeah, exactly.
You know the labor crisis, and you know the other organization can work against the government. In view of the fact that the new government is coming, even if they decided to remove subsidy, it will be gradual and it will take some time. That is one. But the most interesting, we are having not less than 20 new governors. And these new governors, they have to face infrastructures in order to win the heart of the voters so that they can be rebought in the 2026. So my expectation is that building material will be one of the sectors that is likely going to bounce back. Yeah. As the agriculture is still showing the remote, I expect that it will continue going. And the same will apply with the oil sector and the telecom. No doubt with the 5G, the telecom will carry the day. And with the election coming, everybody knows that data will be used. And therefore, we see more improvement in the revenue and the profit before and after tax of the telecom. So these are some of the few sectors that we have no doubt they will rebound back in 2023.
All right. Thank you so much, Malam Kofi, for your thoughts. Now, I'm just going to take your parting shot on the show for today. Ambrose, let's start with you.
Okay.
Yeah, your parting shot.
For me, investors should just reposition their portfolio.
And then he said something about sectors. Do you also want to touch on sectors?
No, he has mentioned the sector. The remaining one is for those sectors that believe that this last quarter of the year, like the aviation sector, no matter how cost the fuel, what's it called? The fuel, no matter what they are called, people are still moving. I mean, stock like a NACO, Cavaton and Saco are likely, because the last quarter of the year we expect to see improvement in the family. Investors to look at how this last quarter was. The hike
in the prices of
there still movement. There is, don't forget that in that business, it is those that are in logistics that make money, not those that are doing the normal operation. The logistics that one that take off, they make money because their cost is not as high as those that are running the operation that are flying. For that, we expect that will impact their work. That is another way to look at. Another thing is that the banking sector he didn't mention is also a good sector, because we saw these banks that are seeing value there, and as far as we are seeing, expect to see rate hike, to have the work also impacted the bank. Don't forget that the banks also taking advantage of our new Africa trade zone that we're having more, and Nigeria bank going into Africa. This is a plus for them. I believe that banking sector will remain a potential people to look at. The telecom here we mentioned, the industrial, the manufacturing sector, few of them also, like the consumer goods. And don't forget the healthcare sector is also a very good way to look at. As far that sector, there's potential and sentiment is positive. If you can look the work for healthcare sector.
All right, thank you so much. Oladipo, in less than 30 seconds, let's have your parting shot on the show.
Well, my own party shot is that 2023 is going to be a very good year, most especially on dollar-denominated instruments. It means that everyone that actually has not invested, there are attractive bonds in the markets that can help, because we know fully well that there's every tendency that some economy globally may likely test recession next year, and that may actually lead to a bit of moderation in aggressive rate high globally, and that will affect the fixed income market. And anyone that has locked in early enough will be able to take advantage of the market.
All right. Thank you so much. Mr. Kofi, in less than 30 seconds.
Well, mine is that play the financial sector, both the fixed income and the capital market, give the promising hedging against the inflation, and I believe they will continue to do so in 2023. So please stay tuned with the financial sectors. They look promising.
All right, thank you so much. It's been a great time with every one of you on the show today. Thank you for coming. I'm Bruce Amodion.
Thanks for having me.
Yeah, thanks for joining us, Oladipo Ajayi.
You're welcome.
Thank you for joining us, Malam Kofi.
I'm happy to be with you. Thank you.
Right.
Thank you, sir.
Well, many thanks to you for joining us today. My name is Perpetua Fasomi Peter. I wish you a happy new year in advance. Bye for now.